What is up, everybody? It's May 14th, 2026, and we're going to talk about some real estate today. And we're also going to cover the Clarity Act Senate markup hearing, which is going to be huge for future investors like yourself. If you want to invest in real estate, it's going to be a big opportunity. I imagine a lot of you out there are invested in crypto. I imagine a lot of you out there have been paying attention to how big the crypto market is going to be. And it is going to be big. Okay, we have Bitcoin, we have XRP, we have Ethereum. These will be the leading ones, and then essentially a lot of what you're seeing with the stablecoin laws. And the reason that matters is because, again, the more money you can make from outside investments, the more you can dump into real estate, right? Multifamily investing, that's what I'm all about. I'll help you be your realtor there. And at the same time, we'll also help you grow your business with Gold Shark Media and all that stuff. But we're going to focus on real estate. We're going to focus on the market trends and what you need to know if you're buying your first home or if you're just investing in multifamily in the state of Michigan. And again, of course, hire me if you're interested. So let's get right into it. I think it's going to be huge. Okay, the mortgage rates today, May 13th, 2020. Well, this was yesterday, May 13th, 2026. 30-year rates dropped to 6.45%. Pretty much still the same news for the day, though, and that is pretty huge. Okay, so mortgage rates are down from yesterday and remain under 7%. Today's national average on a 30-year fixed rate mortgage is 6.45%, according to Bankrate. If you choose a 15-year fixed rate mortgage, the average rate is 5.84%. Mortgage rates have tipped up recently amid dwindling hopes that the Federal Reserve will lower the federal funds rate this year, though it initially looks like Fed officials might make one more cut in 2026. That has become less likely as the Iran war pushes already elevated prices higher. Recent data also suggests that the labor market remains stable, which means the Fed can focus on ensuring inflation comes down to its 2% target. If you're thinking about buying a home, higher mortgage rates shouldn't necessarily keep you from doing so. Average rates are lower now than they were this time last year. And depending on how inflation rates in the coming months, and if the Fed decides to respond to raising the benchmark rate, they could raise this higher. So what does that actually mean? All this jargon, right? Well, it basically means that your opportunities for investing in real estate are going to be somewhat jaded, right? It's going to be tough. But at the end of the day, it's always a good time to invest in real estate. I always like to tell people that because it's true. Okay, they're buy land, they ain't making more of it, as Mark Twain once said. Okay, and then there's also other big news, right? We're going to be covering the Clarity Act today that's happening. This is happening right now as we speak. This is live.
In the way that he's engaged in this
We're
whole
talking
industry
about
has
crypto.
cast a dark pall.
What is your favorite crypto? The reason this
the whole
matters, again, is
process.
because if we win in
So he should
crypto,
decide
if the
whether he
average
wants
retail
to
investor
get
like
this done
yourself
or
can
whether
win
he
in
wants
crypto,
to
then
be
guess what?
rich
You can buy real estate.
Democrats
Everybody
have
wants to
made it
buy
clear
real
since
estate.
the
We know
beginning of
that.
this
It's the little secret, right? What are you talking about at home? If I had all the money in the world, I would buy apartment complexes. I would buy farmland. I would hope you're talking about those things. And if so, of course, hire me. All right, but this is why this is such a big deal today. My favorite coin, honestly, this is not financial advice,
with strong consumer and investor
is the key. Okay, let's see. Yeah, everybody in the comments section is voting XRP. They're liking XRP. I'm hearing a lot about Bitcoin. Again, you got to own a little bit of everything, diversification. But this is very important because we need to make money in the market. Everybody's got to survive, and this is a big day for crypto
Kim number 24.
and real estate potentially.
Thank
right?
you, Chairman. I believe in innovation in financial services and want to harness the opportunity of emerging technologies. And that's why I did support the Genius Act last year. And I believe that this innovation can be achieved while also working to stop cartels, state sponsors of terrorism, foreign terrorist organizations from exploiting the technology. I worked for years on countering terrorist financing before I came into Congress, and I saw how we can find these types of important balances. And I heard from industry leaders how they don't want their products and tools to be used by terrorist groups, and they don't also said that a one-size-fits-all regulation is not the answer. They also said that frameworks of the past may not be fully applicable to the emerging technologies of tomorrow. To those points, I agree, which is why I'm offering this amendment to modernize the Bank Secrecy Act by adding a new category of financial institutions that would allow us to go after cartels, state sponsors of terrorism, and foreign terrorist organizations that are trying to take advantage of the emerging technologies. At the same time, my amendment preserves innovation and growth for true DeFi because I know
Wow,
that
this
on
is
one
crazy.
side-
If you look at the comment section here, everybody's it's like split. You got a lot of XRP fans. You got a lot of people just saying dump, dump, dump. Yeah, I mean, listen, that's what the Howard Lutnitz are gonna do, right? They're gonna dump on you. But at the end of the day, you got to think ahead, diversify in everything: Bitcoin, Ethereum, XRP, HBAR, Algorand. What did Trump choose in the lineup just a year ago in January, right? You got to think back in time in order to look forward. And guess what's happening? Donald Trump picked all of these different assets, whether you like Trump or not.
But this is political because this matters because your investments are the potential future, right? And so, again, what were the chosen ones? It was Bitcoin, it was Ethereum, it was XRP, it was Solana, and then it was Cardano. These were the Trump's top 5 in January. Now, with the stablecoin legislation, I think it's going to help pretty much all of crypto, especially any kind of stablecoin assets, right? So this is why we're paying attention to this today. Got to be able, if you get rich, you'll be able to invest in some real estate and some good real estate. And I like to work with luxury investors, multifamily investors, and people, commercial investors particularly. But I also work with first-time home buyers. This is going to help everybody. Huge for real estate.
Passed bill. So we're really tying BSA into our bill. Thank you, Mr. Chairman.
Clerk will call the roll.
The chairman?
No.
Mr. Crapo? No. Mr. Rounds? No. Mr. Tillis?
Everybody's asking,
Kennedy?
did it pass?
Mr. Haggerty?
Gonna be a while, guys.
Ms. Lummis?
No?
Mrs. Britt?
No.
Mr. Ricketts? No. Mr. Banks? No. Mr. Kramer? No. Mr. Moreno?
Not sure actually what they're
Mr.
voting on.
McCormick?
Sorry, I was talking there.
Ms. Warren?
Aye.
Mr. Reed?
Aye.
Yeah, this is probably
Warner?
anti-crypto,
Mr.
considering
Van Hollen?
Elizabeth Warren was down
Ms.
for it.
Cortez Masto?
If Elizabeth Warren was saying aye to it, it's probably not good for crypto. And if everybody else is saying no to it, it's probably, in the better interest that they're saying no to it. Elizabeth Warren has been a hawk against crypto, and that's why I'm saying that. She's been very anti-crypto. A lot of the Democrats have, not being political, just sticking to the facts. That's a very true thing.
Go number 18.
Thank you. Thank you, Mr. Chair, Ranking Member.
Also, be sure to like, share, comment, subscribe if you're enjoying this content. Again, we're really just covering this because this is the biggest news of the day in terms of finance and what's potential for the future. Okay?
Okay, time working with Moreno. To be honest. But we really have spent the better time of last year in countless meetings, long nights, and working through holidays. And really, at its best, the Senate learns together, finds common ground, and legislates. This is what this process demanded of us, and it's not an easy bill, as we all know, and it's exactly what we try to do. And after working on Genius Act, and we all remember that ordeal, we all learned that solving issues on the front end makes for better legislation. And we took that seriously here, and for very, very good reason. What Congress is attempting to do here is creating regulations for an entirely new sector of our financial system, and it is a massive undertaking. 67 million Americans own digital assets. We owe it to these people, many of whom are young and simply trying to achieve financial independence, to get this right. With 1 in 4 Americans now investing in digital assets, we cannot afford to wait, but we also cannot afford to get this wrong. And that's the balance we are trying to strike. Through serious bipartisan negotiations, we have made incredible progress on this bill. We have narrowed the gap on many of the outstanding issues. We did serious bipartisan work on generally difficult questions about regulatory jurisdiction, consumer disclosure requirements, crypto ATMs, and to name a few. I want to be clear that my vote here does not guarantee a vote on the floor. After today, we need to connect with our Agricultural Committee colleagues and collapse negotiations into one, and all sit at the table. And perhaps the toughest issue of all, we have come close, but have not finished, an agreement on ethics guardrail for elected officials, all elected officials. We need real enforceable standards for what it is and is not acceptable for someone who holds the public trust and shouldn't be able to profit off an industry that they enforce or regulate.
Another reason this is really important, too, is because if you know, Trump and the Trump administration has benefited very big from World Liberty Financial. Essentially, this is Trump's coin and Trump coin, the actual Trump coin, and he made like billions of dollars in one night. And so what this Clarity Act does, it prevents all of that fraud from happening. It prevents any of those kind of things from happening, really. And so that's why this is extremely important.
Vote yes. But if this is not resolved by the time of the floor, like I have in the past, I am not afraid to vote no. Look forward to working together and hopefully come to a solution. Thank you.
Thank you, sir. We will now move, Senator Brooks has decided to offer Senator
Looks like everybody's on
Warren's
board with
the space that she
XRP
had
and
for
Bitcoin. Those
number
seem to be the
7.
big ones
We will
for
now
this
hear from Senator
conversation.
Warren
So anyways,
on
we'll tune back into
amendment
this
number
in a few
79.
minutes.
Senator Warren, you
But
are
I
now
definitely want to
recognized.
cover some other
So the
stuff
Trump
too.
administration has spent the past year trying every
Oh,
trick in
gosh.
the book
Hold
to
on.
kill the
Let's
Consumer
listen to what
Financial
Elizabeth Warren
Protection
has to
Bureau,
say.
the agency that has returned more than $21 billion directly to consumers who've been cheated by banks and giant corporations. Acting Director Vogt has dropped virtually all of the consumer agency's ongoing enforcement actions against crooks and other bad actors. He's tried to lay off
Elizabeth
almost
Warren,
all
you're
of
the
its
bad
staff,
actor.
and he's tried to drain its funding. People have fought back, and a federal court has prevented Trump and Vogt from fully shutting down the agency. But at the same time that Congress is debating this bill, which would dramatically expand the risk of fraud in consumer and crypto markets, the administration is busy trying to fire the cops responsible for protecting consumers.
Look at everybody
now,
behind her.
remember,
They're, like, shaking
the
their head.
CFPB is the agency responsible for fighting to cap abusive overdraft fees and late fees, to strike down medical debt from consumers' credit reports, to protect service members from being charged illegal interest rates on loans.
At the end of the day, it's like
to
she's
stop
so
families from
anti-crypto.
being put out on the street with an illegal foreclosure. The CFPB is going to be more important than ever if we pass a bill unleashing new crypto scams.
Oh my
amendment
gosh.
would ensure that the CFPB receives
That's
a
specifically
consistent
what the
funding
Clarity Act
stream
does, is
that
it
is
takes
instant
away all of the scam coins. So she's lying.
administration
She just
has
doesn't
been
want you to win.
to undermine consumer financial protection in this country. I urge my colleagues to support Warren 79.
We don't support Warren 79 or Elizabeth Warren. No. Sorry. We like money, we like success, and this is America, lady. Anyways, back on to the real estate. Let's actually talk about the market now. May 2026 housing market update. So Seattle median is 865,000, and the 30-year fixed rate is 6.46%, and 13 days is the median days on market for your home, and then $4,495 is the shop prop flat fee typically. So the big picture of spring in 2026 brings a market that's more nuanced than last year. National median home prices remain elevated but are growing more slowly. Inventory is building, a welcome shift for buyers who have been shut out since 2021, while mortgage rates have stabilized in the mid 6% range. For sellers, the window is still open. Homes are moving in under 2 weeks in competitive markets in Seattle and the Bay Area. Again, I work with out-of-state investors too, so the reason we cover this is because we cover national, we cover Michigan real estate. This is where I work and focus, but I also like to connect with all of you out-of-state investors. But days on the market have nearly doubled in some metros compared to 2024, which means pricing strategy matters more than ever. And then going on to the other market, they're lying to you about the Michigan housing market in 2026 update. Okay, so this is by Andrew McMahon, and this is from the Living in Michigan information. If you've spent any time looking into the market lately, you've probably seen some pretty dramatic headlines. Home prices are crashing, the housing market is frozen, buyers have disappeared, mortgage rates are destroying real estate, and depending on what you click on, you might walk away thinking the housing market is either collapsing or somehow still booming at the same time. The truth is, most of these headlines aren't technically false, but they are misleading, especially when you apply them to a local market in Michigan. Because real estate is not a national experience, it's not even one statewide experience. It's a hyper-local, seasonal, and driven by supply and demand. And this is so true. Okay, so you can't get too pessimistic about real estate just because prices are high on everything. Yes, that is a fact. And cost of living is going up because of the Iran war. That is a fact. But at the same time, you have to think like an investor. Okay, while everybody else is dooming and glooming, you need to be thinking about blooming. Okay, you need to be thinking about investing in real estate and making your future worthwhile. And that means buying multifamily real estate, making sure you're buying apartment complexes, duplexes, triplexes, quadplexes, or fiveplexes, which is an apartment complex. And then, of course, commercial real estate. If you really have money, I would say if you have the equity of at least, I would be safe with over $1 million to $2 million. If you have $1 million to $2 million in assets, then that's when you really want to actually focus on doubling down on triple net leases. You want to buy commercial real estate today. One, and for two reasons. First reason is because a lot of commercial loans are coming due. And so with that being said, it's going to open up the market for other commercial investors. And again, for all of you people who are invested in crypto, the more XRP or Bitcoin or Ethereum you have, the more Solana you have, the more HBAR, the more Algorand, the more XLM, which is Stellar Lumens, the more ADA, Cardano, all these digital assets are going to create a significant amount of wealth and inflow into the economy. Okay, so you got to think like this. And at the end of the day, it's like, if you want to have big real estate, you want to make big investments, then you need to think big. And that means you need to make sure that you're investing in the future. You need to chase the unknown, right? And the unknown is crypto. The crypto today is like the new internet. The crypto today is like the .com boom. You could compare it to that. Amazon and Brad Garlinghouse, the CEO of Ripple, which is XRP, has said the same thing, that they are working on that Amazon strategy. Okay, so why does this all matter to everything I'm saying now? Because everything is localized, and that's what we're talking about. Wherever you live locally in the state of Michigan, hopefully, so you can work with me and hire Brendan Ecker. But if you live locally in the markets and you are invested in appreciating assets, things that are moving into the future, that are primed for the future, then you're going to be in an excellent position to buy real estate and acquire real estate, and good real estate that's going to make you money hand over fist. Okay, it ain't easy in America today, but it can be easy if you think the right way and think like the elites. You think like the rich. Okay, and that's what we do on this show. Anybody who watches my show is the top tier. Anybody who watches my show wants to make money. We want to be successful. We want to be excellent. And in order to do that, we need to think in the future. So I wanted to take a little moment to take a look at this video. They're lying to you about the Michigan housing market.
There's a lot of misinformation floating around right now about the Michigan housing market, and some of the headlines you're seeing online do not actually reflect what's happening on the ground. If you've spent even a few minutes looking up the housing market lately, you've probably seen some pretty dramatic headlines. Home prices are crashing. The housing
Right.
market is frozen.
Everybody's saying that. I hear it from a ton of clients.
Mortgage rates have destroyed real estate, and depending on which article you click, you might walk away thinking the housing market is collapsing or somehow still booming at the exact same time. The truth is that most of these headlines are not technically lying, but they are absolutely misleading when you apply them to a real place like Michigan. Because the housing market is not one giant national experience. It's not even one statewide experience. It is hyper-local. It is seasonal. It is driven by supply and demand. And when you actually look at the real data behind what is happening in Michigan right now, the story becomes a whole lot clearer and honestly a whole lot less dramatic than the internet would have you believe.
So again, this is from
So in this video, I want to break down what is actually
www.livinginmichigan.com.
happening in the Michigan housing market right now, while the headlines do not tell you the full story, and what the real numbers say, whether you are thinking about buying, selling, or relocating to Michigan. We are going to talk about housing inventory, price trends, buyer demand, seasonal patterns here in Michigan, regional differences across the state, and some of the advice floating around online right now, like the famous date the rate phrase that might be not quite as helpful as people think.
Right.
And as we go through this, I'm going to reference real MLS data from the past 3 years, as well as what's changed between February of last year and February of this year, so you can actually see what's happening instead of just relying on scary headlines and people on the internet who discovered the housing market last Thursday. And before we get into all this, if you're new here, my name is Andrew McManaman. I'm a Michigan realtor who helps people move to, from, and within the state of Michigan, and I love it. And because I get so many questions from people relocating here, I also created a 74-page Living in Michigan relocation guide that walks through things like cost of living, housing prices, different regions of the state, property taxes,
I'm a big fan of this guy who makes good content.
to live here in Michigan. I've linked that guide below if you want to download it, because it is designed to give you a much better understanding of what Michigan...
Work with Brendan Ecker, of course.
is like than the average headline ever will. All right, let's start with one of the biggest claims you hear everywhere right now, which is that home prices are collapsing. Take a look at the chart right here showing the median home price across the Michigan MLS over the last 3 years. When you zoom out, something very different starts to appear than what a lot of headlines would lead you to believe. Back in
What are you saying?
early 2023,
The prices
median
are going
home
up,
price was
bro.
sitting somewhere
The prices are going up, bro.
in the high 230,000 range. Fast forward to today, and the median home price is sitting around $275,000 as of February 2026. That represents roughly a 3.8% increase compared to February of last year. So right away, we can debunk one of the most common narratives online. Home prices in Michigan are not crashing. They have actually
Right.
continued to rise.
Real estate's always going to go up. The market in real estate is always going to be moving up. That's the way it's built. That's the way it's primed. I mean, it's not always going to be going up, but over a long period and over a long cycle, really, whether you look at the Michigan real estate market or the national real estate market or international, truly, the market's always going to be a trendward up. And that's typically how that goes. Just because there's always going to be new buyers, there's always going to be sellers. And when it comes to economy and the way our economy, the United States economy works, one, we just keep printing money. Two, that means that the mortgage companies, they like to give out loans. And three, at the end of the day, for investors, it's also advantageous. So you have to think like the investors. You got to think like the 1%. And that's the people I like to work with, okay? If you're one of those people, click the link in the description below.
Gradually. Now, that does not mean the market is behaving like it did during the frenzy years where homes are getting 15 offers, half the buyer's dignity, and somebody's firstborn child thrown in the offer package by Sunday night. It just means prices have stabilized and continue to rise modestly, which is exactly what you'd expect in a market where housing supply is still relatively limited. That brings us to inventory, because if you want to
Welcome to
understand the housing
America.
market, you have to understand supply and demand. Take a look at this next chart. If you look at the number of homes currently for sale across the Michigan MLS, inventory here has slowly been climbing. Back in early 2024, there were roughly around 18,000 homes for sale statewide. Today, there are closer to 23,000 homes on the market, which represents a 14% increase compared to February of last year. Now, when people hear that inventory is rising, they often assume that means the market must be oversupplied and prices should start falling dramatically. But when you zoom out and look at the bigger picture, we are still operating in a historically low inventory environment. Right now, Michigan is roughly 2.5 months of housing supply. A balanced housing market typically sits somewhere between that 5 to 6 months of supply.
That is
So
true.
yes, inventory has improved slightly, but we are still far below what would normally be considered balanced. In other words, more homes for sale does not automatically mean there are suddenly too many homes for sale. It just means the market has a little more breathing room than it did before. One of the biggest reasons for
What
that
that
is
also
something economists...
means, when you see when you see the prices going up on real estate and you see that the market's going up overall in real estate, it means that people are essentially digging into the market a little bit more, right? There's more money in the market. And yeah, that means that it opens up for you acquirers, you buyers, you investors. That's what this really means. Okay, so even though the prices are going up and even though that inventory is high, at the end of the day, it leaves room for you to acquire. You just have to make more money. Unfortunately, in the United States of America, that's how it goes. We are a capitalistic country, and in order for our country to thrive, we depend on the bond market, which also piggybacks off of the real estate market. All of these things matter. So you got to think like that.
called the lock-in effect. During the pandemic, millions of homeowners refinanced their mortgages into extremely low interest rates, often somewhere between 2 and 3%. And when your current mortgage rate is sitting at 2.8%, it becomes very difficult to justify selling that home and taking on a new mortgage closer to 6 or 7%. So many homeowners who would normally sell and move simply are not doing that right now. They are staying put, which keeps inventory tighter than many people expect.
Yes.
But there has been some acceptance to that where sellers simply have to move. Another factor is that the country simply did not build enough homes following the 2008 crash. Still, construction slowed dramatically during that period.
That's absolutely
and
right.
even though building has picked up again, we are still catching up from that long stretch of underbuilding. That matters because it helps explain why prices have not fallen off a cliff the way some
Yes.
people keep claiming they should. But here's where things start to really get interesting, because when you compare the last 3 years of data to just the last 12 months, the pattern starts to shift in a way a lot of people are not talking about. The next big headline you hear is that buyers have disappeared. Again, when you look at the real numbers, the story is much more nuanced than that. Take a look at this next graph showing pending home sales across the Michigan MLS, which represent homes going under contract. As of February 2026, there were roughly 109,684 pending sales statewide, which is actually about 1% higher than February of last year. That is not explosive growth, but it definitely does not suggest buyers have vanished either.
Absolutely.
What it tells us is that buyers are still out there.
Sorry about
They're
that.
just
Had to post
more
on
cautious,
LinkedIn.
and more selective than they were during peak frenzy years. We can see this behavior shift in showing data as well. Take a look at this graph right here. Right now it takes about 14.8 showings on average for a home to go under contract, which is slightly lower than it was last year. That tells us something
I think it's
important
less if
about
you
the
market the
buyers currently
property
in the
right.
market.
Yeah, I've typically found that it can be less if you market the property right, just for the realtors out there.
They tend to be more serious buyers. They are not just casually touring homes because they got bored at brunch. When they go see homes, they are usually prepared, qualified, and ready to act if the right opportunity shows up. And I can tell you
Yes.
from personal experience over the last few weeks that this spring market is starting to ramp up here in Michigan. I have had several buyers jump into the market recently, and they are incredibly prepared. They have been watching listings for months. They know their budget, and when the right home appears, they are ready to move quickly. I recently worked with a couple relocating from out of state who initially assumed home prices must be falling because of the headlines they had been seeing. But once we started
lot of
touring
people
homes,
think
they
that.
quickly realized that well-priced homes in desirable areas were still attracting very strong interest. So there is often a major disconnect between what people are reading online and what they experience once they are actually in the market.
That's very true what he just said, because you have to get into the game. Okay, a lot of people are afraid to get into real estate, and they say, well, I'm going to do it later. I'm going to do it in a few months. I'm going to do it. Usually I always hear 6 months, and we're thinking about it in about 6 months. We'll talk again. When it's like, really, just get pre-qualified. Make sure you got no credit card debt. Make sure you have a good credit score, anything 580 or above. Make sure that you have some kind of employment, or you have some college experience that matches your current employment. That will count as employment. A lot of people don't know that little fact. And then you should be pretty much ready to go to talk to a lender. You start working on the things you need and figuring out where you're at in the market. Okay, what can you qualify for? And at that point, you're going to find a realtor, me, and we'll help you find that next property. You probably already have the property in mind. You've probably been looking around. And that's also something a lot of people forget to do. Got to make sure that you're looking around, get an idea of what you want, okay? Because once you get approved, you'll have 45 days to actually go and find a listing. And, well, really me, I'll help you find the listing if you haven't already found it yourself. And you'll have 45 days to get all of that situated. And I'm really going to be doing a lot of the work, and we're going to get that closed for you. And that's what I do. That's exactly what we're doing this stream. It is to communicate with you, buyers, sellers, and investors, to help you close this thing, whatever transactions you need to. Because real estate is fickle, and it's tough. But if you got a tough realtor, then you'll be doing pretty well. That's why you got to work with me. Click the link in the description below and click like, share, and subscribe.
Another factor people relocating here often underestimate is seasonality. Michigan real estate follows a rhythm every single year. Michigan tends to slow things down significantly. It gets dark around 5 o'clock. The weather is not exactly inspiring people to go house hunting. And not many buyers are thrilled to tour homes when it is 10
Michigan
degrees
weather
outside and every driveway looks like it's going to personally offend them. Combine that with not being able to inspect the roof covered in snow or having the ability to dig up that septic lid, which I completely understand. Then around March and April, the market starts waking up again, listings begin hitting the market, buyers become more active, and activity ramps up heading into summer.
Again, I think that market's going to
people see
open up even more. So we won't watch the whole video. I just wanted to watch a clip of that and kind of get a good idea of where things are at, okay? Michigan home prices are not crashing. Inventory is rising, but still historically low. Why inventory is still low? The lock-in effect. Again, that lock-in effect, one of the biggest reasons inventory remains tight is something called the lock-in effect. Millions of homeowners locked in mortgage rates between 2 to 3% during the pandemic. And so again, So when the current rates are closer to 6 to 7%, many homeowners still don't want to move. Even if they should move financially, it doesn't make sense. On top of that, the U.S. underbuilt housing after 2008, and we are still catching up. The combination keeps supply tighter than many people expect. Have buyers disappeared? Not even close. Michigan real estate is highly seasonal. That's the one thing you got to watch out for. We have some crazy winters up here in Michigan. I've been living in Michigan my entire life, by the way, and I can tell you, you got every season, and that's the best part. But at the same time, the winters can be harsh and rough. And remember, Michigan doesn't have the best roads. Maybe I'm not selling too well. Maybe I'm not selling Michigan too well here. But at the end of the day, I'm just, got to be honest with you on that. But that is something to pay attention to when you're getting into real estate in Michigan. Not all Michigan markets behave the same. Absolutely true. And again, when you kind of look at this image right here, you kind of see that. Why people are moving to Michigan? Home prices are more attainable. Monthly payments are often lower. Yes, and especially in Lapeer County, very low property taxes in Lapeer County, something you need to know. And then there's access to lakes, nature, and outdoor recreation also. So again, we do have the sand dunes. We do have we have the Great Lakes. We have the Northern Peninsula. All of this fun stuff that you can actually do. And again, we also have Bloomfield Hills. We have Rochester Hills. All these luxury spots and locations. Metro Detroit, Grosse Pointe Shores. We have all of these places where the rich like to come, and especially people from Florida. You see a lot of people from Florida. I've been talking to somebody from Florida, and then a lot of the time I talk to people from New York. I actually had one commercial investor maybe a couple months ago, and she was looking to get a 1031 exchange here in Michigan, and I had helped her achieve that. And so that kind of worked out, And so you see that all the time. So again, I work with out-of-state investors too. A lot of people think that Michigan real estate agents or any kind of state agent can't work with out-of-state investors, but you absolutely can. And so it's within my scope to help you find a property here in Michigan. If you are an out-of-state investor, call me up, and we will do that. 586-718-3901, or you can email me at brendan.ecker@exprealty.com. Or again, you can visit our website, brendaneckerrealty.com. And again, this is it pretty much where you can find me. You can fill out the contact form. I'll get that email, or you can just schedule a booking right here, or not a booking, but you can schedule a meeting right here. And again, we'll talk about everything you need. Your real estate goals and qualifications, the buying/selling process from start to finish, key contracts and paperwork you need to know about, any questions you have about the market or next steps. And to get the most out of your call, I ask you to prepare your goals, finance details, your timeline, property details, right? The type, size, location, must-haves, nice-to-haves, questions you'd like answered, process, contracts, market, and a notebook just to jot down action items and resources and things I need you to know for this process. But again, you can schedule a meeting on the Calendly link. And again, check out our blogs. I try to make a blog as much as I can. I'm a busy guy. I actually own a marketing agency too and a software company. So we are always moving. But this kind of tells you a little bit about the current trends in Michigan real estate. And again, you can also buy the home buyer's guide. I had made this at the last place I was working. But you can still use it. Still very useful. Everything you need to know for 2026 home buying. It's a whole guide. Everything you need to know. It's like $50. Keep it forever. And yeah, it's just like a quick little guide. It's got everything you need. Take a look at the website, and you'll be able to see what's going on with that. It's pretty cool. And at the end of the day, you gotta know this stuff. It's just very important. Okay, so back to the news. I also wanted to cover the real estate market trends in Detroit, Michigan. Okay, so this is also a big deal. This comes from Realtor.com. Detroit runs on grit, reinvention, and deep civic pride. From the Motown legacy echoing through Midtown to the murals lining Eastern Market and the craft breweries filling once variant storefronts. This is a city where architectural grandeur and blue-collar resilience share the same block, and where home ownership remains more within reach of almost anywhere in the country. Detroit's housing market shifted toward buyers in March 2026. Investors surged, prices dipped, and homes sat longer, giving buyers more options and more negotiating power than the city has had in years. Sellers who priced competitively moved homes. Those who didn't are still waiting. Inventory climbs sharply, outpacing the nation by a wide margin. If you're buying in Detroit right now, you also have the options of all of our active listings today. We have 2,423 homes in March, up 18.3% year over year, nearly 3 times the national growth rate of 6.2%. New listings rose 6.1%, while buyer demand failed to keep pace. More homes coming in, fewer going under contract. That's how inventory builds, and that's exactly what happened. Medium listing prices dipped below $100,000 as price reductions tick up. Detroit's median list pricing slipped to $100,000 in March, down 2% from a year ago, keeping it one of the most affordable major metros in the country. Meanwhile, 15.6% of listings carried a price reduction, up 2.2 percentage points year over year. Nationally, they share actual shrink. Detroit sellers were adjusting their asks downward, while sellers elsewhere held firm, a meaningful divergence that signals real room negotiation here. Homes lingered on the market slightly longer than last year. There's no rush, and last month's data backs that up. The typical Detroit home sat on the market for 60 days in March, up slightly from a year ago. Why is that? Honestly, I mean, Detroit is Detroit. Okay, you can do your research on it. But at the end of the day, Detroit is a gold mine for real estate investors, for rehabs, for BRRRR strategy, right? All of my investors know what I'm talking about. If you don't know what the BRRRR strategy is, then I guess let's look.
Strategy. This is for all of the investors that need to know.
Rent, refinance, and repeat. Okay, this is a real estate investment method designed to build a rental portfolio by recycling capital. Investors purchase distressed properties, renovate them to add value, rent them out, and use a cash-out refinance to recover their initial investment, allowing them to repeat the process. The 5 steps of BRRRR, again, buy. Okay, this is what it stands for. If you didn't catch that, the BRRRR strategy stands for buy, rehab, rent, refinances, repeat. Okay, so you purchase a distressed property or an undervalued property that needs repairs, often using cash or a short-term financing like hard money loans. Then you rehab it, which just means you renovate it. You paint the walls, you fix up the house, you fix up the landscaping, whatever you need to do. Okay, you fix up the siding of the home, and that will add into that forced appreciation. Then you rent it out. Secure tenants to establish a steady stream of income, which is required for refinancing. Why is that important? Well, you got to make cash flow. That's what I'm all about. I want people to make cash flow. I want you to make more money so you can keep working with me in real estate. So I'm always going to give you the best advice I possibly can. A lot of realtors won't. They just want the commission. They just want the check. I'm going to give you everything I possibly know about real estate and the stuff that I know is winning with some of the clients that we work with at EXP and a lot of the clients that I've worked with in the past and a lot of the stuff that I would be doing myself. Okay. Right now, I have my own investments. I'm good. I have a business I'm running. Super, super busy. Okay. So at the end of the day, and I'm also a content creator. I run all of the content on Gold Shark Media. I create all of the content on our YouTube channel, Brandon Ecker and Ecker Geopolitics. And at the end of the day, I have a lot going on. So I don't get to invest as much as I'd like to. So that's why I'm giving you all of this advice so you can do it. Okay, so you secure tenants, you hold that property for 2 years, not one, you hold it for 2 years because you want to avoid that long-term capital gains tax. Again, another thing realtors won't tell you as an investor. Okay, hold that property for just 2 years at least, and you will avoid the long-term capital gains tax. It's extremely important that you know that. And then, again, you refinance. So you perform a cash-out refinance to replace the short-term loan with a long-term mortgage based on the new, higher appraised value. And then you just repeat the process. Okay, you use cash recovered from the refinance to purchase the next property. This is what you use with a 1031 tax-deferred exchange. Okay, a 1031 tax-deferred exchange. And this is how you do the BRRRR strategy. Got it? Great. Okay, so back to the article that we were on. Detroit's March data delivers a clear message for both sides of the transactions. Buyers, if you are in a strong position, more inventory, softer prices, and sellers who have already shown willingness to cut. Focus on well-priced listings in stable neighborhoods before competing offers arrive, even in a slower market. Sellers' pricing discipline isn't optional right now. With 18.3% more active listings than a year ago and nearly 1 in 6 homes already bearing a price cut, launching too high is a costly mistake. The sellers who closed in March respected the market. The ones who didn't are still adjusting. Okay, so you got to think about all of this. Okay, again, Detroit, Michigan housing market, somewhat competitive. homes in Detroit receive 2 offers on average and sell around 63 days. Okay, that's a long time. Now, if you live around Detroit, it's usually going to be around 30 to 45 days. So it's a little bit shorter because, again, there are a little bit nicer markets all around Detroit. It kind of depends on what you're looking for, though, right? If you're looking for apartment complexes, if you're looking for, a real cash flow property and things to actually BRRRR strategy on, then that's why we're talking about Detroit right now. Speaking almost to the investors in a way. The median sale price of a home in Detroit was $104,000 last month, up 15.6% since last year. The median sale price per square foot in Detroit is $75, up 0% since last year. So again, here's the graph, everything you need to know there. There's 430 homes have been sold. That's 19.9% less year over year than last year. And then again, typically 63 days on market for just Detroit. Okay, but now again, if we look at somewhere like Rochester Hills, might be a little bit better situation. Okay, yeah. So when we're looking at Rochester, Michigan, 23 days on the market typically. And when we look at all of this, you can see it's a little bit of a different game. Okay, so that's kind of what you have to think about. It always depends on where you're investing, your localized markets, all right? So at the end of the day, that's what you need to focus on. And then again, we also have 2026 Metro Detroit real estate predictions, price rates, rents, and more. Check this out.
Woof. 2025. Do not let the door hit you where the good Lord split you, right? Or was 2025 the year that popped off? I'm hearing both from people, and I want to hear from you too. Was it a great year, an okay year, or is the world just burning? Let me know in the comments, and I reply to every one of them. The crazier, the better. So now we're on to 2026, and this is the video where I'm going to use my actual crystal ball and predict how the year is going to shake out. I am going to be a wizard, Harry, in this video. Okay, in this video, I'm going to break down what's going to happen with real estate, especially here locally in Metro Detroit, interest rates, new construction, because we need more of those, the stock market, inflation, crypto, luxury homes, and rent. And I want to hear from you. What do you see happening to the economy in 2026? So why me? I've been doing this for over 5 years, these predictions.
My prediction on the 2026 housing market, by the way, before he gives his prediction, I think you're going to see an influx in investors. Okay, I think you're going to see a lot of people that are actually going to be able to buy real estate finally because of things like the Clarity Act, of which we covered at the beginning of this episode. We'll talk about it a little bit more, but the reason the Clarity Act is so important is because it is really about the regulatory frameworks behind digital assets. And why are digital assets so key to real estate? Well, there's already real estate programs already being built around digital assets and crypto. People just don't like to talk about this, but everybody's invested in crypto. They know what the future is, and hopefully you do too. Hopefully you've bought into the market. Hopefully you've gotten these prices as low as you possibly could. Again, there's a lot of different markets out there, but owning a lot of crypto, perhaps, and again with this Clarity Act, this regulation that's going to really, allow banking institutions and cross-border payment transactions, instead of waiting 4 days for a payment to go through, you wait like a second. Okay, things are going to be evolving. The SWIFT banking system is going out. The XRP system is going in, or the XRPL, and then you're going to see Bitcoin running off of that. You're going to see Ethereum running on its own proof of work and all of this stuff. So all of these new innovations, NFTs, all of it. There's going to be real estate NFTs. There's going to be video games like GTA 6. Think about it. Well, I don't know if GTA 6 is going to have this, but there's going to be literally video games where you can buy real estate and you're going to be able to make actual money and currency on it, real fiat dollars on it. And so that's what I predict happening in 2026. I think we're seeing the beginning of this entire market. So if you can hold on to during this Iran war and all of this chaos, you're going to be in a pretty good position in the future. And I'm the only realtor who's going to tell you that. I'm not a financial advisor. I'm not advising you to do anything. Use your own due diligence, of course, as I would tell you to do with any real estate property. But at the end of the day, there's a lot of potential with crypto, and I think it's going to be one of my biggest predictions that's probably going to be accurate in this year of 2026. We'll see what happens. A lot of Democrats trying to take it down, but at the end of the day, if people win in crypto, then you're going to end up winning in real estate because people are going to take that crypto profit, they're going to put it into real estate. And again, that's what I'm hearing. That's what I hear from clients all over the place. Everybody's invested in the future, and hopefully you are too.
estate for 24 years, and over the last 5 years, I've nailed 39 of my 45 predictions. That's 86%. That's better than Goldman Sachs, 65%,
Yeah, that's why
Deloitte,
I'm showing you this
70%,
video.
Wells
This guy's
Fargo,
pretty good.
60%, and pretty much everyone else in between. And hey, by the way, if you're looking to sell or buy a home anywhere in Metro Detroit or Ann Arbor, use the Perna team. We have over 3,000 5-star reviews over on Google, and when the time comes to reach out, reach us at thepernateam.com to get started. So real estate, it's all gonna change this year, so buckle in for this wild ride. This is the big pain point right now. The number of times I've heard in 2025, that home isn't worth that much, is more than any of the other 24 years I've been doing this. In Metro Detroit, you're not wrong. Affordability is super low with both prices and interest rates remaining stubbornly high. And here's what everyone else is predicting. NAR is the most bullish of this group at 4% increase in home prices. Redfin is at the highest at 6.3%, and Realtor.com is playing the middle ground at 4.2%. But here's what's really gonna happen. Home values in here in Metro Detroit are gonna go up 9.5%, led by the city proper, especially because appreciation in the city of Detroit is gonna be a little bit north of 10%, and the suburbs will be a very cool 6 to 8% gain. And why the difference?
Always a good
Detroit
time
is
to
still
invest
super
in real
attractive to
estate,
both
like
real
I was
estate
just
buyers
saying.
that wanna live in a home and investors that wanna rent them out. It is still super affordable versus a lot of the other metros. Atlanta's average sales price right now is $385,000 to $400,000. Nashville's hitting around $500,000. Chicago's $365,000. And Detroit, we're still down at $93,000. We've got a lot of room to move and a lot of room to grow. For the suburbs, taking out Detroit in the 5-county area, we're seeing an average sales price of $306,000, which is significantly below the $500,000 national average. We just didn't
that's
have
about
as huge
accurate.
of a run-up as they did in like Denver or Austin or Atlanta or Orlando or Nashville. So while these markets are nosediving, we're doing just fine. Also, we just saw a bit over 4 million home sales in 2025. Redfin is predicting that to tick up to 4.2 million home sales. Zillow's coming in at 4.3 million. Realtor.com at 4.2. With rates coming up next, we're gonna hit 4.4 million. And what does this mean for you? The first half of 2026 is the time to buy before rates drop, because once they do, all the buyers on the sidelines that have been waiting to jump in will be jumping in, but the sellers won't be. The fear I hear a lot is around foreclosures, and those are gonna stay flat or tick down because 96% of homeowners have equity in the United States. Part two, we're talking interest rates, and this is where the market is gonna catch fire in 2026. Jerome Powell has just 5 months left. It's predicted that there's only gonna be one rate cut in 2026 by Goldman Sachs, Wells Fargo, and JP Morgan Chase. And frankly, these guys are just off their rocker. They are literally nuts. Probably why I beat them so often. Comment below if you think President Trump likes the job Jerome Powell is doing, or has been noisily counting down the days till May when he can replace him. I want to hear your thoughts on what's going to happen next and what needs to happen with interest rates. Okay, here's what's actually going to happen. President Trump is going to be appointing a new Fed chair, and rates are going to drop into the mid-4s. That's what's going to keep the home prices up. Why? If you're potentially thinking about selling and you're going to go from a 2.5% rate to a 4.5% rate, the likelihood is you're still going to try to hang on a little bit longer because you don't want to give up that stupid good rate. Now look at me. I am that target demographic that isn't moving. My rate and payment on my $450,000 house is about $1,400 per month, including taxes and insurance. And to buy the actual home I want, I'm spending at least $600K. I've got some reasonable equity to move over, but my loan is still going to be around $450,000. And all of a sudden, my payment would jump from $1,400 a month to $3,400 a month. That is literally over double what my payment is. So why would I move? And that's what most sellers are thinking. But more will in 2026, just not a million more, like 200,000 more. So rates are going to end 2026 somewhere in the 4.5 range. Some sellers with real life events are going to move, new household formations, stuff like that, but most won't. Okay, let's talk new construction, which will not save us in 2026. We need 25,000 homes built annually here in Michigan to keep up with demand, and 14,000 of those just here in Metro Detroit. Well, what are we going to get?
New construction is huge, by the way, right now. Very popular in Lapeer County, very popular in Macomb County, seeing it everywhere. Get on it, guys. Oakland County, same thing. People are building, and maybe you ought to start building too. And at the end of the day, buy those new construction properties, okay? They're already done, okay? And some of them may be overpriced in your opinion. Well, at the end of the day, again, what did I say earlier that the market is always doing? The market's always going to be going on an upward trend overall.
9,000 here in Metro Detroit. That's it. Builders are still facing headwinds in the materials and labor sectors. And that's all, folks. Nothing to see here, just more disappointment.
Well, that's what he thinks, right? And again, that's just half of that. But at the end of the day, running out of time here. Metro Detroit housing market trends decoded, April 2026. Metro Detroit housing market trends for the home buying and selling. Understanding Metro Detroit, Michigan housing market helps you to make smart, timely decisions whether you're buying or selling a home. You'll have access to real-time data from the Flex multiple listing service powered by InfoSparts. These are the same insights, blah, 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 blah. So here's what you actually need to know. Local market update, March 2026. I know we're in May, but this is probably our most recent data that we can actually look at, okay? So new listings, again, 2025 and 2026, not that much of a difference here. 932 versus 997 here in 2026. So it's a 7% change. And then pending sales, 686 in 2025 versus 758, a 10.5% increase this year in 2026. So when you look at all of this, same thing with condominiums, that market's growing as well. Take a screenshot of this chart. I recommend you do it and keep up on all of that. But at the end of the day, I also wanted to show you a couple properties on the Michigan real estate market and kind of what I was looking at. Okay, so this is the entire Michigan market basically, and we'll really just show you the LP and where I kind of work out of. This area right here, right in the thumb of Michigan, anywhere from Detroit, Michigan, where my cursor is, all the way up to Bad Axe, all the way maybe over to the State Forest area. That's kind of where I like to work. Lansing. Really, the whole state of Michigan, obviously, I can work. If you want to get a property, I'll help you out. I'll make the drive. But this is typically where I focus a lot of my work, and this is what you're looking at. Okay, so when we actually look at the market, we have 239,000, we have 535,000, and this is in Clarkston, Michigan. We have 349,900 in Canton, Michigan. We have 799,900 in Bloomfield Hills, Michigan. We have $549,999 in Saline, Michigan. Warren, Michigan's hanging around 269,900 for these kind of properties. So a lot of potential, right? When you actually look at these are pretty decent properties, okay? So get yourself into the market. Get yourself into the game of real estate. Don't miss out. Don't get the FOMO, right? I mean, God, there's nothing but potential. This is a pretty nice place right here that I'm scrolling through. Again, this is in Clarkston. Okay, so Michigan's booming for real estate, and we're doing pretty damn good. Okay, the rest of the country, who knows? But, I know that Michigan's doing pretty good. And it's never a bad time to buy real estate. That's what I'm always trying to tell people. This is in Brighton. This listing right here, $650,000. But pretty nice stuff, okay? A lot of the houses that you're going to see and the architecture is, typically going to be the same. People are very into that farmhouse kind of look right now, and they're into that kind of vibe. And that's what you're seeing. That's what I'm seeing, at least, from a lot of first-time home buyers and then a lot of luxury investors, whatever it might be, multifamily investors. They're kind of looking for land, and then they want room to grow, build their own houses on top of it, maybe put a little $19,000 Amazon house on there. That's all the good stuff you can do to actually, make some money. Okay, so this is Potterville, Michigan. Pretty nice places when you look at all of these. Definitely cool. So this is the Michigan real estate market. Farmington Hills, very nice homes here as well. Big fan of Farmington Hills. Fun fact, I'm actually, if you didn't know, I'm a police officer. Also, I didn't even mention that earlier, but in my academy, the director of my previous academy, he was a Farmington Hills police officer, and he actually worked in Farmington Hills. Kind of irrelevant to real estate, but at the end of the day, I thought it was kind of a good connection here, since this is that, like, when you look at the house that I'm actually scrolling through. Okay, Bloomfield Hills, 525,000. This is where a lot of investors want to put their money. A lot of people moving out of state want to live in these nicer spots. Okay, and this is where I recommend people look if you're looking to move to Michigan from out of state. Bloomfield Hills, Rochester Hills, Shelby Township, beautiful towns there. Romeo, Michigan, all beautiful places. Metamora, Michigan, all of it. So, and again, I really, our office, EXP, our Birmingham office is out of Metamora. We have one of them in Metamora, and so I'm pretty close to there. So contact me again. Click the link in the description below if you're interested in investing in some of these properties. A lot of potential here, guys. A lot of potential. Okay. So again, these are just some of the houses. This is what we're looking at when you kind of look at Michigan real estate, at least in the thumb of Michigan. And if we zoom out a little bit, we'll get a little bit more of an idea. We'll get a little bit more listings. Maybe we'll look at the UP a little bit here. We have a little bit of time. So when you look at all of this, this is kind of what you're looking at in the entire state. This is a pretty nice listing here, 849,000. And so, again, I'm a huge fan. I like to see all of it. Very cool stuff. And lots of potential at the end of the day. Okay. So, again, think about the future. Think about what you can do with your family in these kind of homes. Okay, this is what we're looking at. If you ask me, quite beautiful, quite worth the investment. And if you want to look at this house, be sure to contact me. We'll talk. We'll look at the property, but this is what people are into today. And this is what I'm into, at least. I like luxury real estate. I'm a big fan of that. I love the megalithic structures. I think that in America, we need to build more megalithic structures in the European architecture, the Victorian Gothic churches, and beautiful castles. I always wondered, how come America doesn't have castles? How come we're not building castles in Michigan? It makes no sense. We are like the greatest country on earth. In my opinion, I would hope you would think the same. And, why don't we have castles? We have such a beautiful land, and it's like, why don't we use it? I love these homes. Don't get me wrong. All great homes. Michigan has awesome real estate. It really does. But at the end of the day, castles are kind of cooler, don't you think? Who is invested in the castles? That's what I want to know. Please work with me. I'm genuinely calling out to anybody who is rich, wealthy, wanting to invest in castles and the, just really amazing architecture. That's the stuff I'm very interested in. I want to be at the forefront of all of these projects. Like, this is pretty cool to me. Like, 2.95 million right here. This is real luxury. So typically a luxury property, by the way, is anything over a sale price of $750,000. That's typically in the state of Michigan is what we classify as this is pretty much what we classify as a luxury property. Especially this. You got trees blocking you, a whole wall around you. Oh, look at that. Beautiful castle model. But it's still too small. It's not like a castle. It's still kind of a hybrid of a house, which is fine. But I want castles. We need like the Bavarian castles, the German, the Austrian castles, and all of those beautiful things. The Swedish and the Switzerland castles, everything you see there. But still, absolutely gorgeous. This is kind of more my style. This is what I love. You know me, Brendan Ecker. This is what I'm into. Secret rooms, all this cool stuff. Okay, work with me, Brendan Ecker. Email me at brendan.ecker@exprealty.com if you're interested in a property like this. But this is the future. And this is what we need to be putting our eyes on. Pretty beautiful stuff. Okay? Worth it. Worth it. This is luxury, $2.095 million. $2,095,000. And at the end of the day, again, why not invest in a little bit of culture, right? A little bit of luxury is good for you. And I think you deserve it. You have a nice coat of arms, got a nice gym. Beautiful. Lots of guns. I like my guns. I'm pro Second Amendment. Sorry, guys. If you don't like that, then get off my show. I'm just kidding. You can work with me if you don't like guns. I'm just joking. But at the end of the day, this is America. We like guns. You got to have guns to protect yourself. Of course, I'm a police officer. I'm, of course, going to be pro-guns. And, the clients that I work with are all pro-gun as well. They're all pro-Second Amendment, and you should be. But this is what we're looking at. Beautiful. Beautiful. Love the castle design. Love it. This is what we ought to be looking forward to. This should be what our eyes are set on. All right. So that's just one $2.95 million property. Kind of curious. Let's look at some other luxury real estate while we're here. And we'll probably call it. So let's do $30 million. See if there's any massive estates. Probably not. I think our most expensive one in Michigan was somewhere around 12 million or something. Up to 30 million. Okay, hold on. I got to set the minimum. Forgot to set the minimum. We'll set the minimum at 750,000, which is where the luxury market begins. So now we're covering the luxury market in Michigan. This is what you're looking at, ladies and gentlemen. If you are looking to invest in luxury real estate, here is what you got. Okay, this is the state of Michigan. Everything we got luxury. I'll show you the UP in a moment when we get through these. But 785,000, 800,000, 7.985 million. What's this? Again, beautiful stuff. I'm interested in people who want to think big, right? I want people who are self-starters and, motivated people who love real estate, who have a true passion for it. And I've always had a passion for real estate myself. My ancestors came here from Scotland and Ireland and then Sweden. And so I'm a huge, huge, huge proponent of real estate. And I think, we need to honor that heritage of real estate in America. And it's a beautiful thing. Nice, got a basketball court. I'm a big athlete. I was a two-sport student athlete in high school. So sorry, I'm a little biased towards sports. Pretty cool, though. Beautiful Michigan estate here. Got a nice in-ground pool. Definitely, woo. That's what I like. Little basketball hoop with it. Basketball courts. They didn't give you too many photos with it, but this is kind of, that's 5140 Turtle Point Drive, Ann Arbor, Michigan, 48105 zip code. Some of these are pretty interesting. We got a lot of different architecture, but again, all good stuff. Very, very diverse market, very unique market. Again, this is for our luxury investors now. That's what we're covering. If you're just tuning in, like, share, comment, subscribe, support the show, support what we're doing here. We want you to invest in the most beautiful real estate, not just any real estate. And that's what I help you with. eXp Realty, Brendan Scott Ecker. You can email me at brendan.ecker@exprealty.com. Again, be sure to like, share, comment, and subscribe. So again, this estate is $1.15 million. This is 60675 Pontiac Trail, New Hudson, Michigan. But a beautiful, exquisite luxury estate for those who are motivated and driven. Again, all those crypto investors, if you're invested in XRP, if you're invested in XLM, you might have this house one day. You could have this house. I'm serious. The future we're going into is a digital future. And you got to be thinking about the appreciating assets. Dive into the unknown. And at the end of the day, you have to be looking at all of the newest markets, okay? Consider yourself living in this home. Consider yourself and your family living in this home. Don't you deserve it? Aren't you tired of this simple life? Maybe you're not. Either way, you get both. In Michigan, you get a little bit of the simple life. You get a little bit of luxury. That's really what we got, okay? So again, this is $1.2 million. This is in Fenton, Michigan. Beautiful. I'm a huge fan of it. Got 57 photos here to check out. So this is more of a beachfront property, it looks like, or an island property, even cooler. So again, $1.2 million, 2350 Crane Road in Fenton, Michigan. And again, if you're interested in this, leave a comment, leave a DM, contact me. I'm everywhere on social media. Pick a social media app, you'll find me. Shoot me a DM, or you can give me a call or shoot me a text. I prefer a text message because I get a lot of scam callers. Text me at 586-718-3901, or you can email me at brendan.ecker@exprealty.com if you're interested in acquiring this kind of property, and we will hook you up. But these are the kind of properties, and if you're looking to sell this as well, again, work with me. We'll do the entire staging. We'll do an entire staging for it. We'll do the drone shots. We'll do all of it. It'll be the best because I only believe in the best, right? I have the highest of quality when it comes to making sure my clients get everything they need. But this is what we're looking at in Fenton, Michigan, one of our luxury estates here in Michigan. Beautiful, $1.2 million. Again, of course, we can always negotiate that price, help you get that property in your portfolio. $949,000 in Ann Arbor, Michigan. I forgot to mention that. That's another good market. University of Michigan, or you have East Lansing, which is Michigan State University. You have Olivet University, where I went to college and got my degree. Worked there as well. But awesome property here in Michigan. Howell, Michigan, $9 million estate in Washington, Michigan. Woo! This is what I'm talking about. Now, this is real estate. This is 68050 Hillside Lane in Washington, Michigan, 48095. And this is a luxury property. Definitely luxury, right? This is where the big money is. Big money. Beautiful. You got a little fountain literally right in your living room. How cool. This is where the XRP investors are going to be, the Bitcoin investors, the Ethereum investors. Am I right or am I right? Got 91 photos here. You got a beautiful dining room. Living room, sorry. Got nice tile floors, raised ceilings, high ceilings too. Statues, which I'm a huge fan of that. Got a nice, beautiful European architecture. You got the Greek pillars here for you Freemasons out there. Are you Masonics? I'm just joking. Got a nice bar, nice hallway, living room, nice, purely like brand new painted walls. Everything is new in this home. Nice dining room. We're looking at the kitchen now. Do whatever you want with the kitchen. I think it looks beautiful. I like the white look to it. Looks like you got the sky above you. A lot of people are into this. I kind of like our more rustic contemporary look in real estate. But you got your fireplace in the dining room. Again, look at that. Imagine your kids playing on their little big wheel in the house. Just right down the hall. Going crazy. This is where you want to raise a family, though. You got your pool. Beautiful. This is like a hotel. This is like a resort. Who needs to go to a hotel when you got some Michigan real estate, right? But this is what it's all about. This is why we work hard. This is why we invest. This is why we invest in digital assets, of course. This is why we start businesses. This is why we do what we do as entrepreneurs, as real estate investors, and as first-time home buyers. This is why we work our tails to the bone so we can have beautiful real estate like this, and so that we can work with realtors like Brendan Ecker, of course. Beautiful bathtub, beautiful kitchen, of course. Got nice jets on it. Built right in, walk-in shower. Nice for the wife, right? Nice for the wife, nice for the spouse. Who doesn't like a little bit of shower time, you know? No, I'm just joking. You got the dining room. Looks like the little girl's room, I guess. Daughter's room. But again, you got a second bathroom here. Nice little study area. Definitely my style. I like the books. I like the library. I like the globe. Got a little psychiatrist chair there. Ease your tensions. I would have that library stacked with books, though. I love reading books. I am a bookworm. Wow, look at that hallway. Huge. It's like a whole football field. This is a massive, this is what I'm talking about, though. This is like the castle kind of real estate that I want to see come back to America. Okay, where are my real estate investors that have the motivation? Okay, let's build the future and let's build castles in this country. This is like a castle. It's like a modernized castle. And this is kind of what I really love about it. Nice. Nice photos, too. This is actually a Keller Williams estate. I actually just came from Keller Williams. Keller Williams is a great agency, but I now work at EXP. I like EXP a little bit more. It's just a little bit more software inclined. I'm definitely a fan of that. But beautiful, though. You got 15 beds, 25 baths. It's 32,890 or 32,891 square feet. Sorry, twisting my words up today. Got a nice second story, third story. This house is huge. This is a mansion. This is a real mansion. This is what I'm talking about. This should be every home in America. Everybody deserves to live in a home like this, in my opinion. And again, if you'd like to acquire this property, click one of the links in the description below. Go to the website, BrendanEckerRealty.com, or you can email me, brendan.ecker@exprealty.com. Shoot me a text at 586-718-3901, and we'll get you a property like this. Okay, invest in the future. That's what I always like to say. Invest in beauty. Invest in what you deserve to live in. Okay, this is kind of where I want people's brains at. I want you to be motivated. Look at this. Look at this. You could retire here, wouldn't you? I'd say, again, you don't need to be living in a resort when you can live in Michigan. We can just live in a nice Michigan castle. Enjoy the rest of your days. Michigan in the winter, right? Michigan in the summer. Michigan in the spring. We got all 4 seasons. Got a nice stone tile walkway here. Beautiful. This is your basement. Got a nice ballroom here for all your events, for all your friends, for all your people, for all your family. Absolutely gorgeous. 5-star living, ladies and gentlemen. Who is the client who is luxury enough to have an estate like this? Talk to me, Brendan Ecker Realty. We'll make it happen. Brendan Ecker with eXp Realty. We will make it happen for you. But this is where I want everybody's vision to be. Almost through it. We got a nice movie theater here. Dollar sign. Like it. This looks like the vault. Wow, they got a vault. This is the vault. It's where you keep all the money. It's It's where you keep your guns, your money, keep the gold, all of it. Maybe even build a. I'm sure it's probably got a secret room in there somewhere. Who knows? I believe this is your upstairs. Looks like your upstairs or your downstairs. I can't really tell. But got a whole nother kitchen in here. Whole nother kitchen. Beautiful. Absolutely gorgeous, right? Got the land. You got a little pond. You really have everything you need. You got privacy. Nice overshot, as you can see. Good neighbors, I'm sure. Looks like they have a luxury estate as well. But you're also secluded. You know, that's kind of my style. And just remember, you don't need the whole $9 million to acquire a estate like this. You need 3.5% if you have good credit, if you have equity, right? And what's 3% of 9 million? You know, I'll let you do the math. It's easy, it's beautiful. And at the end of the day, again, you deserve it. So with that being said, that's all we have for today. Again, be sure to visit BrendanEckerRealty.com and reach out to me, okay? I'll be your realtor. Michigan real estate made simple. Buy, sell, and invest with confidence. Again, I work with buyers in Oakland County and Macomb County primarily, as well as Lapeer County, spanning from Birmingham, Bloomfield Hills, Troy, Michigan, Rochester, Michigan, Shelby Township, Romeo, Macomb, Washington Township. Discover exceptional homes for sale, arrange a private consultation, and gain access to trusted real estate experts and expertise and resources. So just click private consultation. It'll take you to the Calendly link. It'll hook you up. We'll do a little Zoom call. We'll talk about your goals and everything that you want to do. And then at the end of the day, that's that. Or you can, again, just fill out the questionnaire right here, and you can contact me that way. I will receive the message. Or again, schedule a booking, shoot me a DM, leave a comment in the comments section. And at the end of the day, if you are a fellow realtor, then again, this will work for you. Lead engine for realtors. Try the demo. goldsharkmedia.com. This will take you to the 14-day trial for Gold Shark Media, and it'll allow you to get into the software, and you'll really be able to use this entire software for service businesses. It's essentially an AI software for lead follow-up, okay? So a lot of you business owners out there are losing your leads. A lot of real estate agents especially. You guys aren't so good at following up, okay? Let's just be honest about it. So you real estate agents out there, including myself, I use this for myself. This is actually just a dummy account I'm showing you. But you got client workspaces, proposals, prospecting, lead capture, pipelines, invoices, payments, tasks, notifications, communications, social publisher, teams. You got reports. I even built an ROI calculator out of the software, so that way you can basically put in all your numbers for your business, and it'll tell you your projected ROI, your annual upside of $6.9 million, okay? And then it'll give you your additional monthly revenue as well. It'll give you all the math, everything you need to run your business so you can know the numbers, okay? So everything's right here. You can build websites on here. You can host a domain here, get it through GoDaddy. You upgrade to Pro and you get the Google reviews and reputation set up. So again, we set up an entire lead follow-up system so that way you are getting Google reviews. All of this is built for you. AI assistants to help you out. Again, that's like our little chat bot. Have that right here. We're still building the knowledge bases for this. This is all beta mode. I actually just built this not too long ago, but I am proud of it because it is pretty damn good. Not to curse, but it is good. Google account, Calendly, Slack, Microsoft 365, SendGrid, Twilio SMS, Zoom, Google Meet, MailChimp. We got all of it, okay? I've built all of it in here for you. Scheduling, CRM setup, referral center if you want to make some money on the side. Again, we have you can become an affiliate partner for Gold Shark Media. This is my business. But at the end of the day, we are successful because, again, we're helping clients achieve all of this with a one-and-done software, all-in-one system to run your business, okay? And if you've never run a business before, this will help you practice with that. Whether you're a YouTube creator, any of this is kind of necessary for everybody to have, okay? The Trust Center allows you to follow a checklist of everything that you'll need to get done. Data exports, lead CSVs. You'll be able to manage all the admin roles, security. Again, any questions you have, I've listed everything you could possibly need to know right on this page. So any questions, any problems you got, just click the open button and it'll tell you everything you need to know. Okay? So that is your essential Gold Shark Media AI lead engine. And at the end of the day, I have nothing else, ladies and gentlemen. Stay prudent, stay powerful, and stay wealthy. Invest in Michigan real estate. If you want to work with me in real estate, contact me at 586-718-3901, or you can email me at brendan.ecker@exprealty.com. Be sure to like, share, comment, and subscribe. This is a brand new YouTube channel, Brendan Ecker Realty. We're going to grow it to the stratosphere. And at the end of the day, I want to help you accomplish your goals in real estate. And at the end of the day, what it's really about is the American dream. Your American dream is my American dream. To achieve your American dream is my American dream, okay? So work with me, Brendan Scott Ecker. I will be your realtor. I'll be by your side. We'll get this done, and we'll get it done right, okay? You're not just working with me also, by the way. You're working with the best, okay? We work with some of the best staging companies. We work with some of the best title companies. We're going to make sure you're hooked up. And I have a pretty good team behind me and great mentors that I've learned from. So you're not just working with Brendan Ecker. You're working with eXp Realty and so many other great people that I'm going to be able to connect you with. I'm a connector. I'm an entrepreneur. That's what I'm best at. So that's why you want to work with me. And at the end of the day, stay prudent, stay powerful, and stay wealthy. Invest in real estate. It's never a bad time. And invest in crypto, okay? The Clarity Act Senate market markup hearing. Watch it again. Look at the highlights. Study crypto. And think about what it can do for your life. And when you succeed in investing, whatever it might be, whether it be from entrepreneurship, whether it be from investing in XRP or Bitcoin or Ethereum or Solana, any of these different cryptos, HBAR, XLM, no matter what, you work with me because this is where you buy real estate, secure financial freedom, and at the end of the day, you're going to have a good life, okay? Never a bad time to buy real estate. Michigan real estate agent, Brendan Scott Ecker. I'll see you next time.